What's up, everybody? It's Ricky Analog from StockTraders.net here for another episode of How to Dig. It's been a minute since I've done one, and we're about to get the first one of 2019 out the way. But as always, let's get into the formalities first. As always, guys, this is nothing more than for educational and informational purposes. This is not a solicitation to trade, nor is it financial advice. I am not a licensed financial advisor. Do your own research, guys. Let's get into the topic. So we're going to talk about VTVT, and we are going to talk about the whole story behind them. And I'm going to use this as an example to talk about Form Ds and how to recognize a Form D, what they are, the whole 9 yards. I think there's a lot of learning lessons in this this example. So we're going to get pretty deep into it, but I'm going to try to keep it as short as possible. So this is the daily chart for the last year. You can see they've been in play recently. They were in play also back in October. And you can see that they are starting to put in one of them charts that whenever they pop big, all the short sellers get really, really excited because we know that they tend to give back a lot of the move. Well, let's find out why, because usually there's a fundamental reason behind it, right? So let's look at BAMSEC. Of course, guys, you know this is where I go for all my information on the filings. And the first thing I notice when I look at them is they have a bunch of Form Ds. So what is a Form D? Form D is a way for a company to raise capital without having to go through the formalities of a S3 or an S1. Basically, don't have to register a shelf. It's a way of issuing shares for money without registering them at the time. So the first thing to take away from that is these are unregistered shares. And if the shares are unregistered, that means you can't sell them on the open market. So this trades on the NASDAQ. You will not see these shares on the tape because they can't be sold. They have to be registered first. So let's take a look at some of the things that I notice when I look at BAMSEC. The first thing I always want to do is just look and see what's the most recent stuff. You do see that the Form D from just the other day actually is the most recent thing. And if you look over at their 8Ks, you see also the unregistered sale of equities. And that is Form Ds. So you can take quick looks at those. I just want to, before we go into those, I'll go over here and show you guys into the 13Ds and the Form 4s. This Ronald Perelman, you'll see his name throughout these. I mean, we can scroll down and just see him all over this, as well as the McAndrews and Forbes. They are one and the same, guys. Ron Perelman is I think he's one of the only controlling officers of McAndrews and Forbes. It's his company. They are the same. And pretty much, if you do the digging on VTVT, they are all inseparable. Before VTVT went public, there was VTVT, or it was actually VTV LLC. There was VTV Holdings. There was like a few other companies. Basically, to go public, they had to do some reorganization where they all became one incorporated company, and then there was a holding company, and we'll get into the whole thing. But let's also take a quick look at their financials. We'll look at their latest Q, and let's just start at the top, guys. So you notice they have Class A and Class B. Class A is the common stock that we trade on the market. Class B is voting shares used to just control votes. You'll notice there's quite a few of the Class B, and I'll show you later, but those are all held by Ron Perelman. And then you have about 17.6, 17.7 in the OS. A lot of those are held by him as well. And one of the things I always look at, guys, is the cash. 3.7 million, that was the end of September. And so what do they burn? Looking at in 9 months, 21 million. And obviously I misplaced my calculator right before I do this stupid show. 21 divided by 9, we're burning about 2.25 million a month. It's pretty high burn rate. It's not that abnormal for a biotech. But knowing we burn 2.5 million a month and having 3.7 million at the end of September tells you that they're not in a good cash position. So where are they getting the money to pay the light bill? It's not from their revenues. They only did 3.5 million in 9 months, so it's definitely not from their revenues. Well, that's where the Form 4s from Ron Perelman and these Form Ds the exempt securities come into play, guys. So I'm trying to think where the best place to start with this is going to be. Let's just start with what I did in this case, guys, was I went all the way back to the beginning because, you know, I've done research on these guys since they had the move back in October, and a lot of the story has remained the same. But when I did the quick research in October, you know, most of the story was, oh, Ron Perelman bankrolls them with unregistered shares. But I got a lot of questions about it. And so, like, to do this video, I went a little deeper, and I went ahead and just made an Excel sheet where I tracked his holdings throughout history of the company. And we start way back in, was that July or August of, it's August 2015. So 3.5 years ago now. And it's quite the interesting story. And one of the things I like about Excel and putting the numbers down is you can see patterns start to evolve. So, like, let's see what I plotted. We have the date, you have the shares that he owns, the price he paid, whether the shares were registered or not, a total of the shares he owns, the average cost, which is a very important thing to note, because if you wonder if the guy's going to sell his shares, you would probably want to know what he paid for those shares, because he's not going to sell them for a loss, or at least you would think not, right? And how much total money he's invested. And I even tracked the amount of days that passed between investments, because I thought, oh, wow, there were certain times where a lot of time elapsed before you even bought more. You can see right here, back in, let's see, is that May of 2016, he bought some, and then he didn't buy again till August of 2017. So like a year and a half almost went by. But if you look at the rest of the history, he was buying shares on a pretty regular basis. So it's just nice to see patterns. Over here we have the warrants that he owns. Up here we have the Class B common. Sorry, I need to scroll up. And the Class B common, again, guys, is not it's not what you'll see hitting the tape. But important to note is that all those Class B common shares can be exchanged for Class A common on a one-for-one basis. So if you look at the most recent holdings, he has like 23 million shares of Class B. At his will, this guy can convert that to Class A common shares and own what you would see hitting the tape. Now, why I don't think he would do that? Because he uses those Class B to control the voting power of the company. This guy basically is the puppeteer behind the what is the word? The cape, not the cape. The curtain. Sorry, I had a few beers, guys. It is my birthday weekend. And so this guy's been pulling the strings for a while, but the thing that I think is really important to note is that, and actually let me just finish up with the Excel sheet, guys. All of the stuff you see in the red, those are all the Form D shares, which are not registered. So let's just take a look at where it goes to where they are registered. The last registered shares that he purchased was back in December of 2017. And that was, you know, it put him at 2.6 million shares, and his average cost of those shares was $11.68. So, like, if we were to go back and look at the daily chart, let me flick back here. $11. We've never even, well, actually, let's look at the all-time chart. So, yeah, the only time it was ever even close to that level was when they IPO'd. So, you know, this guy has bought shares repeatedly throughout the years, and still has not gotten his costs down to levels where we're worried about him selling. Now, the red stuff, which is from the Form D shares, the unregistered sales of equity, that is done at much, much cheaper prices and does get his average cost down quite a bit. So, like, since he's been doing those, his average cost of what he's holding is $3.93, which is much, much closer to the levels we're trading at today. But you also have to note that if you take into account those shares, he's holding 13 million of them, and he's to date invested $52 million into this company, bankrolling them. Yes, this is how they are paying their light bill. And it's not surprising, because these biotechs that don't have a drug on the market and don't have a lot of revenues, they got to pay for the clinical trials somehow. They got to pay for their employee salaries. They got to pay for research and development. There's a million things, right? So he also does have 1 million warrants. Now, these are, if I'm not mistaken, are registered. And you can see they've been done 3 times. And you can see the different prices he owns them at. It's not what I would consider a substantial amount. It is enough that, like, and it definitely won't help him recoup his losses at this point. The guy needs to figure out a way to get this stock price and this company turned around in order to ever realize a gain on the position that he's built. However, a lot of people have questions regarding whether this guy can sell these shares or not, and if it's something that we should consider overhead supply. And let's just look at the data. So, he started out, he bought into the IPO, obviously, because it is his company. He took a really big position right off the beginning. It was $15 a share, and he bought 1.5 million shares. So, looking at a lot of money invested right off the bat. And then he bought, from there he starts buying smaller and smaller increments as the price just keeps dropping. So, like, let's go back and look at the chart, especially since I have the history of the company up. Let's look. So you guys see how it's been a non-stop downtrend, and it did flatlined there for a while, but it's never had substantial volume. They never had anything that was considered a substantial catalyst, really. And then the price obviously fell off the cliff, and that's when they started striking those deals where he could buy a lot more for a lot cheaper. And it's no wonder why they would do that, because he is the puppeteer, and he does need a way to protect his investment at the same time, still try to save the company. At one point, they did have delisting notices from NASDAQ. And let's see. Let's go into the filings again and start looking at some stuff. So let's just look at the Form Ds. There's been 3 of them. And every time you see a Form D, they've struck a new deal with the guy. So the first one was back in late 2017, and all 3 of them, they all have something in common. They're all for $10 million at a time. Now, he doesn't give them the $10 million up front, but what you'll notice is, so he agrees to buy $10 million worth of shares. And you can go and look at the actual filings from when they did the deals. Let's see, so was it this one? It's not this one. Let me find it. It was December. Yeah, it's right here. So if you see, every single one of them will lay out exactly what it requires. $10 million on this one, and he is allowed to buy. Where is the price he can pay? $4.38. So $10 million at $4.38, and let's see. I have the math laid out at $4.38. That's just a little shy of 2.3 million shares he can buy at that price, and he can at will over the course of the agreement for 3 separate times tell the company, yo, I want to buy more shares at that price. They can tell him, yo, you need to buy those shares at that price as many times as they want throughout the length of the deal. When the deal's done, it's when the $10 million has been spent, or they decide that the price has dropped too low and they need to strike a new deal, which you see they've done twice since. So that one was the December one of last year. They did another one in August of this last year. I got to get used to the fact it's 2019, folks. So here was another one, another $10 million. And we can go look at that one right here, which is in August of 2018, $10 million. And this one was at a price of $1.33. So that's quite a big drop from the previous one, which was $4.38. And that one allowed him to buy up to 7.5 million shares at those prices. And each time they do these deals, that's where he gets the warrants, because they offer him warrants as kind of like a deal sweetener, even though it's not. That's not really going to stop the bleeding. So then you can see then the last one was the one they just did recently. It's $10 million again. And remember, guys, these are all unregistered shares, so you can't sell them. And you'll notice this one says that The total amount sold so far was 1.5 million of the 10. There's still 8.5 left, meaning they still have another $8.5 million of unregistered shares to sell to this guy. So he will still be bankrolling them in the near future. Let's check out that deal, which was just recently right here. And you will be able to see, oh, sorry, clicked the wrong one. And it's right here, and now he's buying them at $1.84. Just keep that highlighted for you guys. So again, $10 million, and again, they gave him warrants. So another thing to point out is they do have this shelf, which was registered in February, the beginning of 2018, and it covers up to $250 million of shares. So this will cover him for all the shares he's bought, but they're gonna have to get the price higher, or he's gonna have to buy more. He is gonna buy more, actually. The price he's gonna pay is $1.84. We're gonna have to kind of keep an eye on the price and see what they do from here. The way it's been trading, I think a lot of shorts have been getting short on every pop to 3, but it's also been really holding some levels, and it wouldn't surprise me if this thing wants to break that 350 level. They can push, maybe they get a 6 test. There's some real levels on the chart if we zoom out, and it's like, shorts need to be, in my opinion, guys, shorts need to be quick and nimble on this, because it has in my opinion, it has the ability to really do some damage if you get stubborn, don't want to take your short off thinking this thing, especially if you don't understand how these Form Ds work and unregistered securities. If you think this guy can just dump and you think there's overhead supply, there really isn't, you're going to get yourself into a situation. And I always tell people, fundamental analysis needs to be secondary to your technical analysis as far as your entries and your exits and your risk management. Risk management is king. It rules supreme. So don't sit here and think, especially if you don't know for sure about the fundamentals. If you're just looking at something and guessing, then you really need to be careful, because you're really going to do some damage to your account, guys. Don't sit here and look at this and think that there's all this overhead supply. There isn't at the moment. So what you're going to need to keep an eye out for is and you know what? They could register these things at any moment, and then yes, you would have that overhead supply. The way I would actually play this is to just use your technical analysis, look for times when the stock gets extended and the trade becomes more obvious. You want that low-hanging fruit. But when they do register this, and when this guy is able to sell these shares, and you're going to see a 424 filing for it, because they're going to register for resale. It'll be a secondary, not a primary offering. It's going to be the resale of these shares that this guy has been buying with these Form Ds throughout the last year and a half, or actually, I guess it's been the last year. He does have shares he can sell that are registered, but they're at prices so high that it makes 0 sense for him to sell those at this time. So I hope this is giving you guys a glimpse into the way to use a Form D, like what you need to research when you see them. My advice is figure out what kind of shares they're being issued. Are they common, preferred? Is it warrants? Whatever. Figure out the value that they're paying for them. In this case, they lay it out for you. Everything's right there. They tell you the price they're paying. Do a little deeper digging. Look at all the Form 4s that are filed, and make your own Excel sheet. Calculate what the average price this guy's holding at. Figure out where you think this is going and what their end game is, because I'm telling you right now, don't be playing checkers when these guys are playing chess. That's really what's happening here, is these guys are thinking long term, and a lot of these day traders are thinking intraday. So try to see the forest for the trees. And yeah, like I said, once you know the price that they pay for them, then from that point forward, it becomes keeping your eyes peeled for those shares to become registered. Once they're registered, it's game on. Then you can bet that there's overhead supply. You know what he paid, and then it's just a waiting game. And then I mean, hopefully you're able to just use your technical analysis at that point to figure out a good entry point, how to manage your risk, and capitalize on the opportunity, because that's all we do here, guys, is we capitalize on opportunities, and you got to learn how to recognize them first. So hopefully this has been of use to you guys. Hopefully I can get some more videos put out, maybe get some more ideas from the rest of the community. If you liked it, subscribe to the channel, click the notification button so you know when we get more, and let me know what you guys think. I'm always down for some constructive feedback on these things, because a lot of times I feel like I'm shooting in the dark. But I hope you guys liked it. Hope you had a happy new year and a great holiday, and I'm looking forward to an epic 2019. This is Ricky Analog, guys. Peace.